Have you heard a lot about Fannie Mae and this whole thing with the credit scores being dropped? Well, I'm Rachel Toms, and today this is for you. Welcome to my channel, Be Inspired. I'm here with Missy Baker, Senior Loan Officer with Movement Mortgage here in Asheville. And we're going to talk a little bit about this so we can really understand, what does that mean? Does it mean something to you? Could it potentially be an opportunity if you're wanting to purchase a home or refinance? Well, stay tuned because we're going to get into the details with Missy. Thank you so much for being here today, Missy.
Thank you for having me. I appreciate it, Rachel.
Absolutely. Across the news outlets and social media, there has been a lot of talk of Fannie Mae dropping the credit score guidelines. And you and I were chatting beforehand. It's not that they have lowered it or anything. It's that they are no longer looking at that at all. Is that correct?
Correct. Yeah. So when lenders submit a loan to what's called Desktop Underwriter, DU, Fannie Mae used to look at the credit score, their debt ratio, their income, their longevity for their jobs, that type of thing. Now they're not looking at the credit score at all, but they're looking at all the other risk factors like their overall credit worthiness, their job longevity. Where it's really going to help people is, like, I'll run someone's credit and their debt ratio, because of, like we were talking, medical bills have been put on their credit. And it's really lowered their score, but their credit overall is still good. Fannie Mae, in that case, will probably approve it because they don't even look at medical collections. That is something that's also taken out of their review for that Desktop Underwriter. So that person might get an approval where a month ago they wouldn't have because of the credit score requirement.
You as a lender, for example, does that mean anything different for you? Or is it just that now this opportunity for Fannie Mae to insure loans for a wider population is just creating more opportunity? Or is there something that you're seeing in your day-to-day work as a lender that would be interesting for our viewers? Would it be that maybe if they were denied a couple of months ago, they should go back and talk to their loan officer? Or what's kind of the status with that? What have you seen since this change?
If the client a month ago would have been automatically declined and their only option was to do a government-backed loan like FHA, now we can look at and compare FHA to a conventional loan. Now, that person, because lenders are still going off of the people's credit score when it comes to their interest rate. Their interest rate on a conventional loan, even though they're getting an approval, you definitely want to make sure that your lender is looking and comparing the FHA and the conventional loan.
For example, let's just use me as an example. I came to you last month and I have a strong employment history, good income. My debt to income is within the guidelines for your lending, but my credit score is, I don't know, 580 because I went through a hardship a couple of years ago and had some credit cards go into collection. Are you saying that when I come back to visit you, we'll look at FHA and conventional? And if I do get the approval on conventional, I might be paying a higher interest rate because of my credit score being low?
Correct, because lenders still go off of that credit score for the interest rate and really for PMI as well. So if you look at the conventional, they may have a higher interest rate, and if they're not putting 20% down, the PMI may be really expensive. But FHA, you're definitely going to have a better interest rate, and the PMI is going to be cheaper. I had a situation where the client was putting 20% down. So conventional, there would be no PMI.
Right.
FHA, there's still going to be PMI. You're only going to have to carry it for 11 years, but who's going to keep their loan for 11 years, personally? You would compare that 20% down with no PMI.
Yeah.
Even though it's a higher interest rate, to the FHA that's going to require you to have PMI, but with a lower interest rate. And I'm finding in that situation that they're both really close to each other as far as the monthly payment goes. But in that case, I'm telling my clients, you might as well go with the conventional loan. You're paying a higher interest rate, but you're getting conventional credit as opposed to the FHA credit.
So can you tell us a little bit about that difference? When you say there is a benefit to conventional credit, I think you're talking about on your credit history, on your credit
history, right,
versus the FHA. What Tell us a little bit more about that.
When you're, like if you're getting a bunch of loans with, say, like a little finance house,
Some of those buy here, pay here,
or
Payday
like
loan type
pay
things.
now,
Pay
now loans,
Okay.
title loans, things like that, as opposed to going to a bank
Yeah.
and getting credit. It's going to weigh more and help your credit score more with a bank
With a banking institution versus
rather
I gotcha.
than like a $500 loan that gets redone every 6 months with those
really
pay
high
here.
fees and
Yeah. So the conventional loans should give you more weight in your credit score. And then, later on down the road, as you see your credit scores going up, then you can look at refinancing it. But the other thing with when you compare the conventional to the FHA is FHA is also going to add, and this is really where the big analysis that I did with that client was, they're automatically going to add their FHA funding fee, which is 1.75%.
Gotcha.
To their loan. What we did was we compared a 5-year balance from the conventional loan with 20% and the FHA loan with 20% and the PMI. And since they had to add that extra 1.75, it made their payoff a little bit higher.
Yeah.
So that was where I recommended going with the conventional loan.
Well, as we're chatting here, it seems like there is a fairly big opportunity for the client that previously, because conventional lending starts at 680, or it did. Is that where
it goes down to 620?
To 620. So let's say I had a 615, and so my options weren't great. Now, I think what I'm understanding is I was so close to conventional financing, but a couple of months ago, I wouldn't have been eligible. So now it's an opportunity for me to come because everything else looks good and have that
and relook at it. Yes. Okay. And relook at, and you definitely want to do a full analysis. Again, like, what is my balance going to be with both of these if the payments are the same? But if you're paying PMI, let's say you put 10% down, again, you want to be able to compare. And that's the huge thing, is that a month ago you couldn't compare. It was just a FHA. That's all you could look at. And buyers were like, I really don't want to pay PMI. I'm just going to wait. And they were like, well, I'm going to work on getting my credit score up. So this is going to open up another opportunity to at least look at. So I would definitely recommend people in that situation reaching back out to their lender. Or myself. And looking at that full analysis over again.
That's so helpful. And it's just, my head's kind of spiraling with all of the people that I have talked to, over the years that maybe wanted to buy a house, but they didn't want to deal with FHA funding or didn't qualify for USDA. Now they have another opportunity to take another look. And I think rates are trending down. Let's get a little rate analysis here while we're talking.
They have been on a kiddie ride as far as a roller coaster. Sometimes it's like a big deep slope, but lately they've just been like that. So they've been pretty level. They're saying that they feel like they're going to stay level for at least the next couple months.
Okay. So many things, so complex.
Yes.
Well, I really appreciate you just pulling back the curtains a little bit on the Fannie Mae dropping of the credit scores for their part of the lending process. And if you are watching this and you'd like to talk to a lender, Missy Baker here at Movement Mortgage is fantastic. She has done my personal loans, known her for a long time. And if you want to talk to somebody about houses in the area, I'm always happy to help. Thanks so much for tuning in.
Thanks for having me.